Welcome to this week's 7X Investors Look Ahead. This is where we'll take a look at a currency pair, an index, or a commodity like gold or oil, and give you our outlooks of what we see coming this week. Before doing that, we like to share with you a little bit about 7X Investors. It's a platform where you can develop a free account and join our community. In that community, you can be able to have free trainings, which we hold every Wednesday. You can also gain knowledge from other traders that are in the 7X community or even in the other communities such as Alpha Trader or 7X Futures. As you attend the weekly trainings, you can be able to get a more in-depth understanding of what kind of trader you would like to become, whether it be in futures or in Forex or CFDs. Once you decide what you'd like to do, we have specialized trainers which will go through step by step on how to become a proficient, profitable trader. We have Cordell Stevens in the Alpha Trader section, which deals with trading CFDs or currencies. And we have Dan Kelly in 7X Futures, which trades futures in the NASDAQ, the S&P, and gold. At the end of this video, we encourage you to click the link below, which will take you to our website, and you can set up that free account. Also, subscribe, like, and turn on notifications of the site so that you can get notified every time we release our week ahead video. Now let's take a look on what's ahead. Hello everyone, and welcome to this week's look ahead. This is the look ahead for the week of October 30th going into November of 2023. So boy, time again continues to fly. It doesn't stop. This week, what's on the docket that we really have to pay attention to is Wednesday. And that's when the Fed comes out, gives a rate. I don't expect them to raise the rate. I do think there's a possibility they'll raise it in December, but not this November. However, it's the speech, it's the minutes, it's the things that are said after that rate is given that we really need to look at concerning the Fed. Now, we know that when Jay Powell did his press interview, he was very what we call hawkish, and he was looking at rates staying at a floor of 3% and having normal rates at 4 to 5%. And that really weighed on the market, and we can see how that weighed on the market and went heavy. So last week we were looking, this is the NAS, we were looking at this support zone, and it did start to lift off. We did take some profit on our trade, but the rest of it was stopped out on this move. Now, last week we talked about how this could roll over and continue down. It did hit that lower target. Not quite. The lower target was about there, but once we broke this, turnaround got shorted on the move down. I was hoping that we would get kind of one more push up before we rolled over. It doesn't look like that's going to happen at the level I thought it was. It may happen at one of these levels down here. So we have the level of 13,896 to look at, and we have the extended level of 13. We're going to call that about 13,414. Okay, so we're going to be very, very cautious in trading this week, and what I mean by that is we're long off of this channel, but I'm not looking to stay long. Okay, I've already taken some profits today, and looking at this may just range here a little bit. When the Federal Reserve comes out, does a little doohickey, we could see something, we could be heading up here, and Wednesday comes over, and we could come back down and break through and retest and continue down. All right. So I want you to be aware of that is a very real possibility. And so I'm got my stop placed right here on this long, and very willing, we'll just mark that in red so you can recognize the stop, very willing to turn around and go short this. So on the break of this support here. First target would be, if we go short, 13,889, and second target would be 13,421. Let's just put it at that on the NASDAQ. So that's what I'm looking for this week. We'll see what pans out. Kind of look for similar movements in the NASDAQ if Powell comes out and he's a hawk again. And if he really puts it down. Now, does he need to be? Yeah, I think we need to. I think we need to get off the Kool-Aid for a while. I think we need to. I mean, you look at everything and everyone and every business and so forth, and they planned years out for low interest rates, and they're getting creamed because their plans have been for low interest rates. And I think after a while, we just knew that that couldn't continue. It was very surprising. Now, obviously, I've been trading since 2004. It was very surprising to everyone to see the Fed keep rates that low for that long. It was very surprising. It caused a lot of stock buybacks from companies. You know, you had to look at the shrink float. I mean, all those types of things where you're trying to figure out, okay, what is this? A company can go out and borrow cheap, buy its stock, raise its stock price, cash it in, and pay cheap on the loan and make money in return. I mean, that became a common practice with companies, and you know, that's, come on, you know, it's time to get back to some normalcy. I think what the Fed's doing, it hurts, it's hard, it's going to wreck a lot of people, but I think it's necessary, and I think we need to get rates up there a little bit higher, and I think where we're at right now is a good place to stay for a while. We'll see how all this pans out. We'll see if it puts us in a heavy recession, and we'll see how the Fed reacts to that if that does happen. Will they begin to lower rates? I mean, like he said, looking at 3%. So maybe they lower them, but maybe they just go to 3%, and that's the floor in the deal. And you know, the Fed has stopped buying mortgage-backed securities. They've stopped buying a lot of treasuries. And this has left demand waning because of that. It doesn't mean that the collateral is bad. Treasuries are some of the highest collateral in the world. I still think they retain that crown right now. I don't see a change in that currently because of the euro-dollar system, because we're still on the dollar being the largest use of exchange currency in the system. I don't see the BRICS coming in and overtaking that just yet. They may put a dent in it, but I don't see them overtaking that yet. And so I still believe that U.S. Treasuries hold themselves up as good collateral. Now, we can get in all the nasty details about the U.S. debt and so forth, and that is a very important thing to talk about, but you're getting into the rabbit hole, so we're not going to do that here. But right now, that's pretty much the way we see it. So if we do start to roll over and come down and break, those are the two spots we're going to. If we don't, you know the other spot, the spot's up here, 15,251. I'm more apt to think that we roll over just because of geopolitical events, plus I think the Fed's going to be hawkish in its statement. That's my opinion. Doesn't mean it's going to happen, but that's what I'm looking for. But I'm nimble. Either way. I'm not bullish or bearish, people. I'm what's in front of me each and every day is what I'm trading. And that's really what's important, is because, you know, trading is really a day-by-day thing. You can have your outlooks, and we put them up here, and we see them, test them, and see if they're going to work. But it's a day-by-day thing, and when that outlook changes, you flip it, get on the other side of it, or you'll get creamed. So very important in this market to stay nimble. Next, we're going to take a look at oil. Oil, we're still short this from about this level right up here, about 88.50. Still short this. We're in a range period right now, but I believe it continues down. Target I'm looking at right around, again, in the 79 area, maybe some 79, some change, maybe 80. Somewhere down in here, I'm looking to take profits on this. I've taken some profits off already, but looking to take the majority or the remaining of my profits off right down here. Now, this obviously you need to be careful about, because we have some geopolitical events which really has a lot to do with oil. But you know, our president has gone hat in hand to Venezuela and done some negotiation with them to get oil. He's also allowed larger productivity in the U.S. Maybe that is tampering the oil prices down. In my opinion, it probably is. We still have the strategic petroleum reserve that's depleted. It needs to be, add excess to it, especially during these times. So hopefully that happens as well. But for right now, I'm looking at oil going lower. Okay. Now, after it hits this area, I'm going to stay kind of neutral on it and see what happens with oil. But there was a trade here, took it. So far, it's done very well. We've caught this pullback, we've caught this down move. It's all been good on oil. So this is dollar yen. I'm not doing a trade on dollar yen this week. We've been in this long, but it's getting kind of worn out. We're getting back up here to the resistance zone. In this area right here, and let me just mark this, in this area right here, what I want to do is I want to stay neutral in that area. So I don't want to do anything right now up in here. If it breaks this level right here, we will get long dollar yen. So if by some chance it races up there and breaks through and holds this week, which I doubt, we are going to be long dollar yen. And so I'm looking for that. And if that does happen, we've got a long ways to go with dollar yen to the upside. So again, not doing a trade here this week, but if by some chance that breaks through, know that I will be getting long dollar yen. Okay. Last week we were looking for a continuation of the upside. I had target right up in here about 1996, and then I was looking for a rollover. Okay, so we're at that target. I am flat gold, but this rollover. Okay, so some things have changed, and the swap spreads have increased on bonds, and so we're looking at the possibility of this not rolling over. A lot of primary dealers are beginning to hold treasuries as collateral. That generally tells you that there's a possibility of deflationary event coming, and if we go into a deflationary event, gold's going to go up. Okay, and this is one of the reasons why I think Bitcoin has been going up. I know there's been the exchange and everything, but you need to find the fundamentals, the background is why this stuff is moving the way it's moving. And then you need to also overlay your technicals with it. And from what I see right now is that there is a strong possibility of a deflationary period going into next year. Now, I'm not sure when that happens, and markets prepare for that way before it happens. And so I'm looking at gold here. I'm going, okay, it would be nice to get a pullback, and our pullback was to 1948, but I'm not really sure that happens. I'm neutral right now, gold. I kind of wish I would have left a position on, but I'm neutral right now, hoping for a pullback. Would like to get a pullback down to there, but we look at the overall structure of gold, and we'll do that out here on the weeklies. We have been in a really large range. I'm just going to do this real fast for you so you can kind of see what I'm looking at. So we've been in a really large range. All right, and we've come off the bottom. Let's go back, see if we can go a little further back, squeeze it up here. There you go. So we've come off, so we've started on this move up, and we've done this pullback, and we've come up to this range. Okay, now we could have went to the bottom of this range again, but what I'm seeing now is price is beginning to build in this range, and it's building to the upside. So my outlook on this is that gold is going to break out of this range to the top side like that. Okay, we're gonna get new highs in gold in the coming year, and there's reasons for that, and I'm not going to go into those here, but we are beginning to build. So you see this support. We'll just do support and resistance. It's easy to do. We'll just do it here. There's other stuff you can do, but Support was right here. It bounced off that support, and technically what we're getting is we're getting this downward move starting to build upside pressure. This is why I'm not really comfortable going short gold anymore, because we may have entered into a situation where the bullish momentum is building in gold and it's about ready to push out and push out hard. So gold may not be coming back down to these levels or even this level. I'd really like to have a pullback in gold to that level, but I really don't know, because this is looking awfully bullish. Again, it could do whatever it wants. It could come up and do this number and do that number and be in here for a long time and then break like that. All right. I fully believe that's a possibility. I'm not ignorant of that fact. However, from a trading standpoint, I do not want to get involved in this unless I get a pullback. I don't. Let me just put it this way. I don't want to get involved in a short. I want to get a pullback and look to go long it. How's that? All right. And that's the way I view gold. So if I get this pullback, and I'm going to trade this short, if I get the pullback to 1947, I'm going to look for a reversal there, and I'm going to trade it long if I get the reversal. And that's the way I'm going to be trading gold, because I think we're entering into that bullish, or the beginnings of that bullish momentum for a breakout of this range. That's pretty much my view on it. Okay, our trade in Bitcoin went fantastic. However, I was not expecting a breakout here. It just sliced right through it. So we're going to continue this move up to the 36, possibly 37 point, but 36.5 maybe. Now again, I do not have delusions with Bitcoin. I fully understand what its use is. I fully understand maybe what its investment is. I'm still learning the investment side of it, but obviously the trade side is relatively simple. But the investment side of it is taking on new meaning. And what I mean by that is we're entering into a time of currency uncertainty. And Bitcoin is becoming more and more a go-to application for exchange. And when we look at currencies, we look at the ability for them to be exchanged. And we're looking at Bitcoin. Is it a exchangeable currency? Can it be a currency? And is it exchanged enough to be a currency? You don't want a currency to be moving 20% in a day. Not a good thing if you hold the currency. If you hold it and it goes up, 20% down, not so good. Your buying power is decreased. So is Bitcoin beginning to stabilize enough to where it can become a reliable exchange unit? And that's really the investment side of it. And that's something I still don't have an understanding of yet, if it's reached that point or not. The moves in Bitcoin are still pretty significant when they do move. And so my opinion is that there's still a lot of volatility in Bitcoin. In currency, you don't want volatility. You want more stabilization and low volatility. So where does it go from here? Well, I don't know. I'm just taking it step by step. My next step is the 36.50 or 36.5 and maybe the 37. And then we'll take a look at it again from a technical standpoint, because that's generally how I'm trading Bitcoin. And we'll see where it's at from there. But again, still looking for long targets this week. So still looking for the up move. We've taken a little breather here, but looking for a breakout to head on up. And next target would be 36, 36.5, and then 37. And that's what you can look for this week to trade Bitcoin with. Dollar index, where is it at? Where is it going? Okay, so we're in a sideways range right now. So how do we trade this? Well, here it is. A breakout to the top side of this range. That means a break above this and a closed candle, solid, would put us up here at target 107. Just going to call it 108. Okay. A breakdown is going to put us at target about 104.50. Okay. And that's what we'd be looking for this week. So we're at the top of the range. Expect this possibly to go down the next few days. And maybe once it gets close down to the bottom of this range, you can move that up a little bit if you want. Go to the body. It may pop there. So we may come down here and then dollar starts heading skyward again. This is a range trade. So I'm not going to suggest, because in a range, it's a day-by-day affair. So when you're looking at a week ahead, I'm not going to teach you to trade the sideways range. I'm going to just simply say, if it breaks one of those two levels, those are the targets it's going to. And that's pretty much as I'll do here. In our classes, we go ahead and we look at these in detail. We figure out what's going to happen the next day and how to trade it. If we want to go in on a day trade, or if we feel like everything's good for it to move down and do another touch on the bottom, we'll trade it to there. But I'm not doing that here. This is kind of a look ahead, so that's the way I would trade that if it breaks one of those. We see uptrend here, now going sideways. You've got to determine. So this is a big move right in here coming up and breakout. You got to determine, is this going to pull back more in your trading? Is this going to pull back more before it pushes up? Or is it going to push up and then pull back and then push up? And that's what you're looking for here. You're looking for one of those two scenarios. My opinion with everything is we range down here, but I think we're going to break back up and continue up. Okay. And again, doesn't mean that it can't pull back more before it does that. It's just my opinion that it's going to pull back here, keep in the range, and then break up higher. All right. I would take that side versus pulling back more, simply because the dynamics of the dollar and what's happening with it, and the lack of it, and the lack of liquidity. I want to take a look here at the VIX. So far the VIX has been moving as planned. And again, we were looking at this range, and what do you notice here? So we did get the range up, down, up, started to come down. What's happening here now? Well, what's happening here now is this thing is squeezing. Okay, see the squeeze there? It's getting pumped. Okay, meaning it's getting ready to do this. All right, and it's building. It's building. You see the lower lows and the higher highs. I'm sorry. See the higher lows and the lower highs. That's a squeeze, and it's getting ready to pump. Obviously, I don't know for sure, but I think it's going to pop to the top side. And I think we're going to see 24, 25 in the VIX, in maybe not this week, but probably here in November, we'll probably get that. So that's pretty much what I'm looking for on the VIX, and that's what it's looking like it's getting ready to do. You see this resistant level right here. It's penetrating that. It's coming back in, penetrating again, coming back in. It just looks like it's wanting to go. And so I'm looking for the VIX to move higher. That's why I'm more on the side that stocks are going to head down, because I see risk peeling off. We see a risk-off environment. And so that's why I see stocks heading down and NASDAQ short, S&P short. So I'm more on the short side. I'm long now, but I'm more on the short side, just waiting for the flip. And last but not least, we're looking at the 10-year. 10-year does not look like it's interesting and returning to the downside. It looks like it's building for another break. So what does that mean? Well, it means, again, that this is a range, and it's ranging in here, and it looks like it wants to pop. Something like that, okay? So it looks like we want to go up, no, maybe not that far, but maybe 5.10 or something like that. Very, very important that we keep an eye on this. This, boy, I tell you, everything's pushing these rates higher on these bonds, 30-year, everything. Very interesting times we live in to see the effect of this. And the more they do, the more those who are holding to term are going to get clobbered because the value of the bond drops as the rate goes up. And so if you bought bonds at, say, 1.5% interest holding to maturity, those bonds are getting more and more worthless, and if they're on your balance sheet and you're using them as either collateral or to cushion your balance sheet, you're kind of in a pinch. And yes, I'm talking about banks. So this could get nasty if this continues to climb higher. So we'll be looking at that. We'll be looking to see how the Fed handles that, because it's going to become an issue. The bank carnage is not over yet. In my opinion, it's probably just beginning, especially as things sunset March of 2024. We're going to be in a real pickle then. But we discuss that more in our classes and so forth, the events that are coming up that's going to cause banks to really have a hard time. So we're going to be looking at this. Continue to watch the 10-year. Again, you're seeing a separation from the 10-year gold. There's reasons for that, and so I'm kind of explaining those at the beginning about the swap rates, but that's a whole nother deal. But basically what we're seeing that primary dealers are preparing for a deflationary move in markets. So that's why gold's going up. So be careful, because these rates could still continue up, and gold could continue to go up, and dollar could continue to go up. The VIX could continue to go up. There's a lot of things that you have to keep an eye on here, and it's a real different environment of trading, especially compared to 2021 and most some of 2022 before we started the downward move. So it's a real different environment. And you need assistance with that. You need mentorship if you're new to this game, or if you're in this game and you just can't seem to get ahead. You need mentorship to help you through that process, and you need a community. And that's what we've done. We've in 7X, we've built a community that helps one another, and we can lay our questions out there. We can lay our concerns. We can lay out our failures and say, hey guys, what did I do wrong here? And we can help each other in this time of need, because this is getting really dicey. Even for myself, I've been in the trading for almost 20 years now, and some of the stuff I'm seeing is very new to me. And it's like, because of past knowledge, I have to go backwards and forwards to figure out what's going on before it gets out of control in my head, because I've been used to using these mechanisms one way, and now it's all changing. And they don't work like they used to. And that's when you have to really do your research, go in there and find out what's going on, and then come back and say, this is what's going on, and this is why it's behaving in this way. And so that's something that we do in 7X. It's something we do in the mentorship programs. We go back and forth with you. We don't just give you a layout of a chart and a technical view. We give you the knowledge, the background behind it, so you know what's going on. So if you need help, come see us. Just sign up for a free account at www.7xinvestors.com to see if it's something you want to tackle, something you want to, have a mentorship with. And then once you decide what you want to do, if it's futures or Forex, pick a mentor, go in there and get busy and get it done, and we'll help you do it. Alrighty, so that's my spill for this week. Hope this helps you in your trading. Again, it's a day-by-day affair. Please be aware of that. Take care, have a great week, and good luck in your trading.